guys, welcome back, welcome back, welcome back. Welcome back to ASMR, Money, Mentor. I'm quickly realizing that this channel is becoming all about me right now. Kind of strange, right? Of course, it's about you as well. I want all of you to be doing really great things with your money going forward. Hopefully, many of you are building your wealth slowly so you can get to where you want to be. And in fact, a new subscriber recently wrote to me and said that he was glad he found the channel and that there's hope for him, that he could have a bright future, you know, just by me sharing my story. And so I would hope that many of you are learning from what I've done in the past, and that it is possible for people to turn their lives around, financially speaking, and do really well. So for all of you that are here, that have found me, thank you so much for being here. And when I say it's a little bit like about me right now, it's because, you know, I'm just in this period of time where I'm trying to make decisions, and so let me catch you up on where I'm at right now. I am, of course, recording this on Monday, the same day that I'm dropping it. It seems like gone are the days that I prepared my episodes in advance, right? Everything is just happening so fast. I kind of like this though, too, because, you know, it's more immediate. As I create the content, I drop it, and you're seeing it a little bit more real time than my past episodes. But anyway, I hope you find it relaxing, of course. So yeah, today's Monday. Let me catch you up. I did have Open Door came and evaluated my property. They will let me know by Wednesday or Thursday what they could pay me in a cash offer on this condo. And then I think I also shared with you, forgive me if I forget what I'm sharing with you, because there's a lot going on. I looked at another condo, more inland, it's like 20 miles away. And you know how when you look at a place, you have to think about it like, how am I going to feel in a few hours? So I got back and I started thinking about it again. I looked at the pictures, and then you start like visualizing, you know, can you really live there? Can you picture yourself there? And a lot of times it's a good sign if you can picture yourself being there, then maybe you should move forward. But I'm not so sure I like that part of town. It's not bad, it's just, you know, that's one thing that's going on in my mind. I'm also not so sure I'm really ready to make a move, to be quite honest with you. And I finally realized today that in talking to my realtor that showed me the place 20 miles away, I was talking to her about my thoughts and my feelings and my options. And by talking to her, it helped me realize that, you know, I said to her, I feel a little bit like I'm under pressure because if I do buy a property, I was thinking I would get a loan through Ally Bank first, which I can do, but you know what, you guys, that's so much red tape. Applying for a loan, etc. And I have the assets where I could just pay cash for something, and that's when I started thinking that, to some of your points, some of you that have written comments, you said, if you can be comfortable with the risk, then maybe just doing nothing is the best option. And I don't know where I'm gonna go, because on Thursday I'll get the offer. If it's a great offer, I might be like, Sal, who knows, right? information that I need to make a good decision. I know I'm kind of rambling here a little bit, but across the street, do you remember when I sent the video or put the video in my episode that showed the parking lot was flooded? Well, directly up above on the third floor is a unit that I went to today. And in fact, I had been to that unit, 20 years ago because a friend of mine, Todd, used to live there. And she showed me the unit. I walked in and it looked exactly the way it did. There were no updates to it. And I didn't get that wow feeling like, yeah, I definitely want to move here. So I was kind of surprised by my reaction. So I don't know that moving to higher ground in my community is the answer. It's an option. I just don't know. Would it make me feel like I'm going backwards? I don't know. But what the realtor helped me realize is that, I feel under pressure because I feel like I need to get the loan while I'm still working to qualify. So what did I do? I called Ally Bank today and I proposed an idea to them, and I said, because they qualified me for about $600,000 on a loan, which of course I would never buy a place that expensive. And I posed the question, I should say, that if I was retired, how does somebody get qualified for a loan? And they said it's through, pensions, which I don't have, guaranteed income like Social Security, which I won't have for another 3 years. And then he also said, if you could prove how much you're taking from your investments. And again, I just thought, a lot of red tape. Knowing that my assets are, I've got 1.4 million and then 200,000 in the value of this property. So on a piece of paper, I started writing out a different way of looking at the money, and it made me feel a little bit more, perhaps, comfortable with just relaxing for a little while and making decisions and deploying answers or solutions based on the outcome. But let me try to explain. I may have shared this with you before, but remember my people at Vanguard, they're going to have me open up a traditional IRA, of which I do not have at Vanguard, and I'm going to move $429,000 of my 401k because that's no, I'm sorry, I totally screwed that up. I'm going to open up a traditional IRA. That's a new account because $603,000 of my 401k balance right now is in a pre-tax bucket. So we're going to roll that over. $600,000 in a brand new account. My existing Roth IRA right now, remember, is about $200,000, but $200,000 in my 401k is in Roth. So we're going to move that into my existing Roth IRA. So I'll have a Roth IRA now of $429,000, a traditional IRA of $603,000. Then I'll have my health savings account of $57,000. Well, that's almost $1,100,000, which I only need about a 2.5% withdrawal, which is $27,000 to pay all my expenses. And I start to realize, I'm like, Evan, that's not even a 4% withdrawal rate. In other words, I'm building a case in my brain for saying that my taxable account right now is $196,000, of which, if I ever liquidated that, by the way, I did some research today, $85,000 of that is subject to capital gains tax, which would be about up to 20%. So that would be $17,000. So that balance would go to $332,000 after the tax. If I needed to deploy that money as reserves, similar to what I shared with you before in my equation, but I'm just expanding my thought process of the what-if scenarios. So I would have $332,000 after tax. Sorry, you're probably confused by that because I'm adding in the short-term reserves of $153. So $196,000, which 153, which is my short-term reserves, gives a total of $350,000, but it would be $332,000 after the tax of the brokerage account. So that money could really be sitting on the sides, not even part of my retirement money. Does that make sense? So that let's say I stay where I am right here. A year goes by. Great. No hurricane, no flood. Well, yes, hurricane, but maybe no flood. Maybe the big flood comes in 5 years, 10 years, who knows? But then I would deploy that money, have peace of mind, and buy something else. And then have it renovated, and then maybe sell it. So anyway, remember how I said before that Vanguard said that, and I shared with you before that a lot of people that got into trouble perhaps with living here and, flooding and not having insurance or not having the money to rebuild, that really doesn't apply to me to some extent. So, again, as somebody said in the comments, if you can ride the risk and if you can find comfort in that, which is where I'm kind of heading, that's going to give me some time to think about what my solution really will be. And you know what? I never, and you should never do this either, but when you go through periods in your financial life like I'm in right now where I'm trying to figure things out, it forces you to be creative in your thinking and how you can deploy money for things in the future that we don't know will happen or won't happen. It was the same way I felt all these years when I was saving money and investing. Remember, part of the secret of knowing or having financial savviness is knowing in the year that you're in, how do you move the money and put it where it needs to go? What's the best thing you can do with that money in that year? So if some of you are just starting out and you've got $200,000 and you're working and you're 35 years old, or whatever scenario you're in, you should always be looking at things and going through those periods of intense emotional thinking about money. And then backing off and saying, okay, I just did all this work. A lot of it is emotional work. Again, I'm feeling the surge of a hurricane, even though it did not happen. The waters are coming into my financial brain. Okay, that sounded stupid, but you know what I mean. I'm really challenging myself to think about what would the outcome be and what would I do, because you don't want to go anywhere without a financial plan. And I'm going to be sharing more with you as we go throughout the week. I really have no clue what I'm going to do, but when I walked into that third floor unit that I just told you about, I didn't have that wow feeling like, yes, I want to move here. It was just kind of like, yeah. So that kind of told me like, maybe change would be good. If there's one thing you guys may have figured out about me is that I guess I don't like change. I've had the same job for 26 years. It's been a wonderful career. Same company, I should say. Lived in the same place, etc. So facing change for me is a good thing. And I feel like I may be ready as we get closer in 2025 if I'm going to make that change. And again, to circle back to what I just said and to close this episode, the realtor today, her name is Angel, of all things. Her name is Angel, a really nice girl. And she said, you know what, Evan, you just might not be ready. But you have done all this legwork. And she said, I'll be here if you want to sell later. She said, selling in the summertime, you could probably get more for your condo at that time. That's a good time to sell, she said. So I know there are not going to be any hurricanes in January, February, March, April, May, June, July. By August, yeah, the risk comes back up. So by then I will have decided, if I don't make any changes now, it'll give me plenty of time in retirement of not working and getting used to my life not working. And I think the answer will come to me, and I'm going to have all my ducks in a row. I will know exactly how much I can get for this place if I list it. I could maybe deploy some money to buy something else and then replenish that once I my situation a little bit differently, and she even gave me an idea, and she said you could rent your place here. And I'm like, yeah, So that's another risk, that yes, you can rent it out and get all this income, and every year that you bank that income is a win to offset the potential of a flood. So if it happens in 5 years, think about all that money I would have, saved on the side to offset the bad thing that could happen. Just like when we're thinking about the stock market, which, by the way, you guys know this year, I think I checked my 401k and it's at 12%, and I have a blended portfolio. My 401k right now is 60% stocks, 40% bonds, and so as we get closer to the end of the year, of course, I'll figure out all those numbers and share that with you. But once again, it appears going into the end of 2024 here, unless there's any real big changes, the stock market is once again doing very well. So we haven't had a dip in the market really since 2022, right? Yeah. 2022 it went down, but it came back up. And it's funny, I'm feeling those emotions, but it's with my home as opposed to the stock market. Anyway, with that, everybody, I think I will go ahead and close out this episode. Thank you so much for watching. I hope you're all doing really great things with your money this year. Don't forget to build your budget as we go into the end of the year. And I will see you in the next episode.